Alright, what is up you guys? Welcome to CG Money 24/7. Today, we are diving into ETFs with mind-blowing dividend yields. Yields so high, they make your savings account look like it's collecting dust. We'll break down the top 7 highest dividend yield ETFs and the potential catches. Disclaimer, I am not a financial advisor. This video is for informational and entertainment purposes only. Investing involves risk, and these investments can be complex and volatile. Do your own research and consult a professional. Make smart decisions, alright? Ready to explore these high-octane dividend ETFs? Stick around. We're going to go through them one by one. If you appreciate this deep dive, consider tapping that like button. It costs you nothing and helps the channel out a ton. Let's get into it. Kicking off our list at number 7, we have the YieldMax MRNA Option Income Strategy ETF, ticker symbol MRNY. MRNY is boasting a dividend yield of a staggering 154.02%. In the past year, it's paid out $3.62 per share in dividends monthly. MRNY primarily invests in healthcare equity, using a synthetic covered call strategy on Moderna stock. This strategy aims to generate income from option premiums, but caps gains if Moderna stock surges. The fund is actively managed, using both standardized exchange-traded options and flex options. MRNY is collateralized by cash and U.S. Treasuries for risk management. Launched on October 23, 2023 by YieldMax, MRNY targets high income from Moderna stock volatility. That 154% yield is enticing but comes with the complexities and risks of options strategies and single stock exposure. Next up at number 6 we have the YieldMax Coin Option Income Strategy ETF, ticker CONY. Connie reports a dividend yield of 150.47%, paying out $13.36 per share annually, with monthly distributions. Connie primarily invests in financials equity, focusing on Coinbase Global Inc. stock. It uses a synthetic covered call strategy, collateralized by cash and U.S. Treasuries, to generate income from Coinbase's volatility. The fund is actively managed, launched on August 14, 2023, by YieldMax. Connie's strategy involves selling call options to harness volatility, but gains are capped if Coinbase stock rallies. The 150% yield is attractive but comes with substantial risks tied to a single volatile stock. If coin stock plummets, the fund's value can drop significantly, and high dividends might not offset capital losses. Extreme caution is advised. At number 5 we have the YieldMax MSTR Option Income Strategy ETF, ticker MSTY. MSTY offers an annual dividend of $30.25 per share, translating to a yield of 140.55%, with monthly payouts. MSTY focuses on MicroStrategy stock, heavily correlated with Bitcoin, using a synthetic covered call strategy. The fund is actively managed, launched on February 22, 2024 by YieldMax. MSTY targets high income from MicroStrategy's volatility, but the risks are significant, especially if Bitcoin's price drops. The 140.55% yield is enticing, but comes with the potential for capital depreciation if MSTR stock performs poorly. At number 4, we have the YieldMax Short TSLA Option Income Strategy ETF, ticker CRSH. CRSH boasts a dividend yield of 164.62%, paying out $7.97 per share annually, with monthly distributions. CRSH aims to provide current income and indirect exposure to declines in Tesla stock through a synthetic covered put strategy. The fund is actively managed, launched on May 1, 2024 by YieldMax. CRSH's strategy profits if Tesla's stock price declines, but gains are capped if Tesla tanks. The 164.62% yield is derived from high option premiums on a volatile stock like Tesla. However, shorting strategies are inherently risky, and Tesla's volatility adds to the complexity. If Tesla stock rallies, CRSH could suffer significant losses. The massive yield compensates for taking on a high-risk bet on one of the market's most unpredictable stocks. At number 3 we have the YieldMax AI Option Income Strategy ETF, ticker AIYY. AIYY reports a dividend yield of 164.62%, paying out $7.97 per share annually, with monthly distributions. AIYY focuses on C3.ai, Inc. stock, using a synthetic covered call strategy to generate income from AI stock volatility. The fund is actively managed, launched on November 27, 2023, by YieldMax. The 164.62% yield is attractive, but comes with concentrated risks tied to a single AI company. If AI stock experiences a downturn, the high dividend yield might not protect your principal investment. At number 2, we have the YieldMax TSLA Option Income Strategy ETF, ticker TSLY. TSLY reports a dividend yield of 118.83%, paying out $10.81 per share annually with monthly distributions. TSLI focuses on Tesla stock, using a synthetic covered call strategy to generate income from Tesla's volatility. The fund is actively managed, launched on October 22, 2022, by YieldMax. TSLI targets high income from Tesla's volatility but caps gains if Tesla stock surges. The 118.83% yield is attractive but comes with risks tied to Tesla's performance. If Tesla stock drops significantly, TSLI's value will fall, and high dividends might not cover capital losses. The sustainability of such high yields depends on continued high volatility in Tesla. TSLI offers a high-stakes income play from Tesla's volatility. Finally, topping our list is the YieldMax NVIDIA Option Income Strategy ETF, ticker NVDY. NVDY reports an annual dividend of $14.81 per share, translating to a yield of 99.28%, with monthly payouts. NVDY focuses on NVIDIA stock, using a synthetic covered call strategy to generate income from NVIDIA's volatility. The fund is actively managed, launched on May 10, 2023, by YieldMax. The 99.28% yield is attractive but comes with risks tied to NVIDIA's performance. If NVIDIA's growth slows or market sentiment shifts, its volatility might decrease, reducing option premiums and distributable income for NVDY. 7 ETFs with astronomical dividend yields, mostly from the YieldMax family. Using option strategies on highly volatile stocks. Yields from nearly 100 to over 160%. Attractive monthly payouts for income seekers. Not your grandma's dividend stocks, higher risk involved. Synthetic covered call and covered put strategies cap upside potential. High dividend yield might not offset capital losses. Sustainability is a big question mark. Depends on continued high volatility. Fund managers must make the right calls. Specialized tools for sophisticated investors. Approach with extreme caution. Do your homework before investing. Smash that like button, subscribe to CG Money 24/7 and hit that notification bell. Thanks for watching, see you next time.